Welcome back to Candlestick Signals for today's market, September 2nd, 2025. Buckle up, traders, because we're about to dive into a sea of green candles and bullish momentum that is sweeping across major sectors. From geo-dropping technical breakouts to institutional investors flexing their muscles, today's session is one for the books. But hold on tight. We've got some warning signs mixed in with all this optimism. Let's break it down. The market today was a veritable fireworks display of bullish patterns, with Marubozu and Golden Cross formations lighting up the charts of leading large-cap stocks. But here's where it gets interesting. We saw over 530 securities flashing near Doji formations, hinting at potential pivots. And if that wasn't enough to keep you on your toes, a record-breaking 843 hanging man patterns emerged, typically a red flag in extended uptrends. Let's zoom in on the technical landscape. The star of the show was Lennar B, ticker LEN.B, which put on a masterclass in bullish signals. We're talking a KDJ Golden Cross coupled with a textbook Marubozu formation. This double whammy of confirmation had buyers chomping at the bit, pushing prices skyward with conviction. The cherry on top? Strong volume and perfectly aligned moving averages backing up the price action. But Lennar B wasn't the only name making waves. Across the board, we saw a smorgasbord of technical signals, bullish and bearish engulfings. Hammers and haramis spread out across various market cap tiers. Now let's break down the sector highlights, starting with housing and construction. Lennar bestole the spotlight with a staggering 5.8% surge after Warren Buffett's Berkshire Hathaway dropped a cool $780 million investment. This move triggered technical breakouts left and right, culminating in that picture-perfect Marubozu candle we mentioned earlier. In the technology and AI arena, it was a sea of green. Several AI and cloud companies flashed bullish engulfing and Doji patterns, signaling a surge in market confidence. The tech sector as a whole saw an impressive gain of almost 8%, translating to a market capitalization change of $57 billion. Software and IT services were the MVPs, each clocking in gains of around 8%. Hardware and storage weren't far behind, posting a weekly return of approximately 7%. Shifting gears to energy and industrials, we saw some serious muscle flexing. Energy stocks like PBF Energy and CVR Energy not only posted strong price gains, but also showcased bullish reversal patterns, all backed by rising volume. This sector formed a bullish continuation candlestick, suggesting that buyers are still very much in the driver's seat and pushing prices higher. The basic materials sector also joined the party, albeit with more moderate growth. Selected materials stock leaders like Newmont and Agnico, Eagle Mines posted strong gains, contributing to an overall sector increase of 3.8%. This translated to a market capitalization change of $28 billion. Keep an eye on this space. A bullish engulfing pattern formed on Wednesday, potentially signaling a reversal of the previous downtrend. Now, let's talk sentiment. Today's market was practically screaming risk on, with aggressive buying in both large and mid-cap names. The high frequency of upper shadowless bullish candles, think Marubozu and bullish engulfing, reflects a wave of optimism sweeping through trading floors. However, and this is crucial, the prevalence of hanging man patterns is waving a yellow flag, especially in sectors that might be getting a bit too hot. Let's break down the numbers. We saw a whopping 803 hanging man patterns, primarily in tech, industrials, and large-cap stocks. This is typically a signal for caution during uptrends. Doji and near Doji formations clocked in at 534, spread across all sectors. But particularly prominent in tech, these often indicate indecision or potential reversals. Bullish engulfing patterns made 176 appearances, concentrated in home builders, AI, and consumer sectors. A classic bullish reversal signal. On the flip side, we spotted 213 bearish engulfing patterns, mostly in financials and mid-cap stocks, suggesting potential bearish reversals at the top. Marubozu patterns were more limited but packed a punch where they appeared, especially in home builders like our friend LEN.B. Lastly, we saw 484 harami patterns, both bullish and bearish, scattered across the board. These often point to indecision or trend inflection points. Let's break it down by market cap. In the large cap arena, we saw dominance of hanging man, engulfing, and Doji signals, especially in tech and industrials. This paints a picture of both momentum and near-term vulnerability, a classic proceed with caution scenario. Mid-cap stocks were all about bullish engulfings and hammers, supporting price recoveries in cyclical sectors. If you're looking for potential turnaround plays, this might be your hunting ground. Small cap land was a bit more of a mixed bag, with a higher frequency of indecision patterns like harami. This reflects the higher volatility and sentiment-driven moves, typical of smaller stocks. So, what's the bottom line for September 2nd, 2025? We're looking at a session characterized by robust bullish technicals, sector-specific breakouts, and widespread participation in key candlestick formations. The bullish patterns like Marubozu and engulfings are certainly fueling optimism, especially in sectors benefiting from positive news. However, and this is crucial, traders need to keep a close eye on those caution signals, particularly the hanging man patterns popping up in industry leaders. The overall outlook remains positive, but selective. This is not the time for a buy-everything approach. Instead, focus on disciplined, pattern-driven trading strategies. Remember, in the world of candlestick analysis, context is king. A bullish pattern in an overbought market might not carry the same weight as one in a sector just starting to turn around. Keep an eye on volume, moving averages, and broader market trends to complement your candlestick readings. As we wrap up, let's not forget the bigger picture. Today's session is just one piece of the puzzle. The technology sector, for instance, has been showing strong momentum for quite some time, and there's potential for this positive trend to continue, possibly reaching new highs in the near future. In conclusion, September 2nd, 2025 has given us a masterclass in candlestick formations and market dynamics. From the bullish breakouts in housing to the cautionary tales in overextended tech stocks, today's session offers valuable lessons for traders at all levels. Stay alert, stay disciplined, and above all, let the candles light your way through these exciting market conditions. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is, and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.